Hi, this is Ian from PIA First. It's Sunday, 22nd of March. I'm going to look at the dollar index briefly, and then we're going to talk about euro dollar. Basically, whether or not the medium-term forecast has changed after last week's events. Now, the dollar index, we've actually got the monthly chart on the screen at the moment. There was a large correction after the FOMC on Wednesday. There was some short covering which developed, and there was some really aggressive buying in euro dollar, sterling dollar, etc. as people were getting out or getting taken out of long dollar positions. That did reverse quite aggressively on Thursday, and it's now given us a bit of a mixed view going into this week. However, we haven't broken back inside this channel formation, which is very important. We actually are still holding above the 50% retracement level, so we're still expecting a move up to this Fibonacci confluence area, which is around 102, the figure. Now, reflecting that back into onto euro dollar, this is again the monthly chart. We're still expecting further downside towards this parity and Fibonacci confluence area, which is around the figure 60 at the moment. You've got to think about timescales here. It's the 22nd of March, so we've basically got a week left of the March calendar. We'd really need to see a move back above this 61.8% retracement level at 112.10, which is 400 odd ticks in a week. I'm not saying it can't be done, but that would then give quite a decent sort of spike in doji to the downside at that very important area. It should also be noted that would also be the completion of an ABCD formation taken from the middle of 2011. If we break that down into a weekly chart, I still think we're going to struggle to see a rally of that sort of magnitude over a 1 week period. And if we did, then obviously this area, which is 115.32, is going to be a substantial barrier. I'd expect at least a pullback there and then a rally. But when we break down last week's price action into shorter time frames, this is obviously after FOMC, large spike, but then we've got a huge doji candle on the 4-hour chart, which actually retraces, I think it's something like 250 points or pips of bullish price action. And again, rallies then got rejected and we've moved to the downside. Now, an important factor for us going into this week is the fact that this pink line here is at 108.30. Okay, and that's our bespoke resistance level. And basically for the last 3 days of last week, the major currency pair euro dollar failed to close above that level. And if we put Fibonacci extension, or retracement I should say, we can see that on Friday we failed to hold levels around the 108.76 level. So basically we've also posted a demarked correction count on the hourly chart from that 61.8% pullback level. There's nothing to say that this rally has finished. Okay, we could see just a mild dip lower Monday morning and then a move up towards this 76.8% level. We have got strong support coming in at 107.30, 107.14. We need to see a break there to take this major currency pair lower, okay, and to focus again on that parity area. So our bias is mildly bearish going into this week. Like I said, we need to see a break of 107.30, 107.14, which is again one of our bespoke support levels. and then a breakout of that channel formation. We expect the downside to continue. Okay, thanks very much for listening, and I'll talk to you again soon.